Welcome to another edition of Expert Talks by Kalkine TV. I'm Sage, and today's guest is Mr Ciaran Burke. He's the CEO and co-founder of Swoop Funding. And the FinTech industry, you may have noticed, is expanding at a significant rate. Traditional ways of lending and borrowing are transforming. And Swoop Funding simplifies and speeds up access to loans, grants and equity funding for businesses. Not only in the UK, they also are able to help people in Australia, Canada and Ireland who are pursuing businesses, ensuring the best through their exclusive partner network for funding. And I definitely want to find out more. So bringing you live today, we have Mr Ciaran Burke, the CEO and co-founder of Swoop Funding. Welcome to the show, Ciaran.
Thanks very much for having me, Sage.
Well, to make the most of our time together, let's get started. So in your opinion, what are the significant issues that businesses face while borrowing money through conventional institutes? And how are these issues solved by Swoop Funding, please?
I suppose the reason we started Swoop was there isn't one type of funding, and traditionally a lot of businesses have always gone to their bank manager when it comes to funding, and recently a lot of banks have not provided the same infrastructure that they once did for small businesses, where you would always have that relationship approach where you'd have a one-to-one relationship with your bank manager. What the bigger banks are doing in most developed countries these days is scaling back their small business offering and offering more of a one-to-many approach. As a result, lots of small business owners don't necessarily know where to go or what product is right for them when it comes to funding. And that's essentially where Swoop comes in. Because I suppose the most important thing to say up front is not every business needs funding or should go for funding. So the first thing we like to do is help them understand their financial position, understand their cash flow. And then if they do want to go for funding, understanding what the right product is. Naturally, people will think of a business loan as the first option available to them. But actually, there's a wealth of different options out there. So you might consider getting equity investment from an investor, or because of where you're based in the country or what sector you're in, you might be able to get a local or a government grant, which can often be a lot cheaper way of investing in your business. So from our side, it's understanding what the business is, what their aspirations are, and then from there, deciding whether there is a right funding path.
That's very interesting to find out, and I can see why things might have changed over the last few years for small businesses. I think lending policies have become a little bit more conservative. So can I ask, before we continue with the mainstream discussion, when did Swoop come into corporation? When did you start trading?
So we launched Swoop in May 2018, so we'll be 4 years of age in a couple of months' time. We first started off in the UK and the Irish market before launching into the Australian market, and then most recently, late last year, we launched in Canada. The backdrop has definitely changed quite a bit over the last years. Obviously, there's been a lot of access to finance options for small businesses. Outside of traditional banking, you've got lots of alternative finance. But with COVID coming along, there's been a huge wave of funding from government institutions, and that has really expanded the amount of lending that's been done in all markets that we've been operating in. But it's also meant it's kind of stymied innovation in some respects within the lending market, because all businesses have kind of gone to the government-backed lending schemes. So we're kind of coming out of that phase at the moment. So it's really interesting to see how different countries and different companies are adapting to this kind of new lending market that we're now in.
That's fantastic to hear. I've noticed that there's been some crowdfunding for businesses that's become more prevalent here in Australia as well. And I think Austrade, our government department, is starting to link up more with the UK, which is really interesting to see the changes after Brexit and how Australia and the UK are linking up again. So do you have anything to share on that from your perspective?
Yeah, I suppose just talking into the kind of trade relationships, there's been a huge opportunity for Australian businesses because of that trade corridor and the trade relationships that sparked up post-Brexit. It means obviously there's a lot in the agricultural space, with the UK committing to take a lot of Australian agricultural produce into the market. Therefore, there are a lot of banks and lenders looking at Australian businesses in the agricultural sectors that have established business operations or some sort of operation in the UK market that can fund and fund those trades and fund the export finance. So it's definitely a big area, and it's a big opportunity for Australian businesses to get funding because the growth that they're going to experience because of the trade. The first kind of part of your question was around crowdfunding, and that is always an interesting one. We see a number of businesses in business to consumer space go down the crowdfunding route as an option. The reason being, if you have a B2C style business, you're going to naturally have lots of different customers. So putting your product out on a crowdfunding platform can be appealing. The downsides to going with crowdfunding as a young business, you're putting out all your information about your business online, so your competitors can find out all about you. Plus, it can be quite expensive. So crowdfunding platforms will traditionally charge you kind of between 6 to 8% on all the business, all the money that you're raising on a crowdfunding platform, and you yourself will have to bring at least 30% to the platform, of which that crowdfunding platform will charge a percent on that. So yeah, it's definitely a growing product, but has its pros and cons. But and then yeah, in relation to your first question, huge amount of opportunity for Australian businesses getting funding that are doing more trading with the UK market.
That's fantastic. Thank you so much for sharing that. And very interesting dynamic you bring up there about the websites and competition knowing too much about each other. That's very interesting for the young businesses especially. So you call Swoop Funding a virtual CFO to businesses. What are the other benefits of Swoop apart from easy access to loans and grants, please?
Yeah, it's as you allude to, the virtual CFO aspect is, as a small business owner, you might not have to be able to afford your own financial director, or you might not be able to have an accountant. You have to wear many hats, so you might not be the most financially literate out there. So that's kind of where we step in, and that's where we've been developing the technology behind the platform. So as a small business owner, you can come into Swoop and you can integrate your bank account using open banking. You can pull in your cloud-based accountancy software, so your Xero or your Sage or my OOB, which is pretty popular in Australia. From that, we can ascertain all the things that you're spending money on and all the things you're making money from, and start to give you insights to say, hey, you might be overpaying on your energy, or your insurance is up for renewal, we can get you a better deal, or you can get a better utilities contract over here. So it's not always about bringing in money, but it can also be about making your business a better run business, reducing your overheads so that when you do go for funding, your affordability ratios are much more improved, which is why we're trying to strive to be that virtual CFO to small businesses.
Yeah, and that's great to hear that there are services like yours who are able to support people who are thinking about developing their ideas, especially in these times. I've noticed that, so many small businesses are closing down, but then other people are filling the empty shops with new ideas. So there's this big changeover and evolution of the business diaspora in a way. But a lot of people are bootstrapping to make their ideas happen, which seems, sometimes one of the only ways. What are your findings in regards to how much people have to have already in regards to savings and accumulated debt? What are you finding, or which businesses do you see proliferating in the current economic setting, and how has the pandemic affected the lending and borrowing market in your opinion?
Yeah, obviously the amount of capital someone might need to start up a business can completely vary depending on the type of business, because some businesses aren't very capital intensive, and therefore you might need to do a small production run, and therefore you need to get the money together to pay for some stock. We've obviously seen, because of the pandemic, a huge shift in retail, whereby a lot of people are moving online and having e-commerce style businesses. And again, the overheads to creating your own website and buying stuff through online channels massively reduces the amount that you need. However, at the end of the day, you're always going to need a sum of capital if you're looking to start a business, test things out. So there are different options that you can go down. As I mentioned, yes, there's going to be lending options in lots of the markets that we work with. It's always important to see how the government is encouraging startup businesses. There's very often startup loan schemes that you can get access to, where you can get access up to, in some cases, maybe $20,000, $30,000 at a preferred interest rate, because the government is backing that scheme. Also important to tap into your kind of local region to see if there's any early stage startup grants to help you with capital expenditure, whether you're purchasing new equipment or purchasing new stock. The other side of things is looking outside of the lending market and seeing, are you available to get investment, and looking for any kind of investors that might be able to back your business. However, if you're looking traditionally at the lending space, most banks are going to look at where you can get collateral against you. So if you're a home owner, if you have any kind of personal assets, or you've kind of significant cash, then you can always raise money against those as well. But plenty of options out there. It's important just to understand which one is right for you.
Exactly. And I suppose it also depends on what stage your business is at. I think you support people from seed right through to Series B funding. Are you finding that there is still support for those very early stage ideas that are being ideated and incubated, or do you think people are looking for more stable enterprises to invest in?
Yeah, the great news is there's way more options than ever before for those early stage businesses that are starting to incubate. I think a big frustration for a lot of startups is it's very hard to get that big investor check at the very beginning, because there's thousands of ideas out there. Why would an investor back you, or why would a fund back you? But there's lots of other funding routes that you can use and get access to funding along the way. I mentioned that there's been a huge shift to online, and a lot of e-commerce businesses have sprung up over the last year and a half. Well, there's loads of financing behind the data behind e-commerce. So if you're putting a new business online, you're utilizing something like Shopify, you can use the data behind Shopify to get access to money. So if I'm making $10,000 a month selling through Shopify, there are lenders out there that will give me 1, 2, or 3 times my average monthly takings that I can use to then go and purchase or grow my business, and then they take a clip back on my future revenues. So instead of hitting me with interest rates up front, or any kind of cost of capital, or diluting my business, there are kind of cash advances that you can use to look like as an early stage business, and that allows you to grow the business, and then puts you in a shape that you might be able to then get that bigger investment or that bigger loan. So there's lots of different options out there.
Thank you for that. And profit and loss sheets can sometimes be more complicated, and taxation and things like that, than we initially know. And how do you find that the institutions and the lending facilities are treating these sort of maybe newer people into the business arena who may not be financially literate yet? Are they exploiting these people, or do you think it's reliable and fair, the trade that's going on between the institutions and the businesses?
Yeah, I think that's where we try and come in ourselves in terms of helping with the education piece, because all financial institutions or investors are going to need to see financial documents. It's only natural, if they're going to give money over, that they understand the business and they can calculate things. But it's also equally important for the business owner to understand the numbers that they're giving them. And it's on the basis of those numbers that they're going to get accepted and rejected. So very often, bank statements is going to be one of the most important collateral when you're going to an institution or someone for funding. So understanding what they're looking in the bank statements is important as a small business owner. They're obviously going to see, is there money in the bank account, but what they're also tracking are, what are the ins and what are the outs, what's the average bank balance, does it have any kind of trends in terms of, does it peak for a couple of months, does it reduce massively for a couple of months? Because what they're trying to do is predict patterns, so that if they give you money, they're forecasting what is going to happen to you over a long period of time. And equally understanding the affordability in the business, should they give you a sum of capital. So they're obviously going to look into the balance sheet, see if it's a solvent business. Similarly, they'll look into the management accounts and dig up the P&L and see over a period of time, what are the profit levels, what is the kind of growth around the revenue figures. So again, getting familiar with these documentation and how a bank or an investor will look at them, cut them, and analyze them is really, really important for a small business owner if they're going to look for finance.
Thank you so much. Yes, just for putting that in a nutshell for us and giving us some clarity on that. It does pay to shop around, I suppose, and to read the fine print. And I suppose that's where an institution or company like yours can support. And we have to wind up the discussion now, although I'm quite enjoying this interesting chat. So FinTech is rapidly expanding, and what do you think the risks and opportunities are for the future of the sector?
I think there's a huge amount of opportunities in the sector, in that it's hyper competitive. So the end consumer, whether they're a small business or they're an individual, they're only going to benefit. You can see obviously the banking sector being massively shook up by a lot of challenger banks coming in and taking away all those traditional charges that we all faced around transferring money, using foreign exchange, being able to go around your day-to-day banking completely nearly free of charge. And the same is starting to happen in the small business space, where traditionally small business owners had to pay the most expensive things when it comes to day-to-day banking or financial services. And FinTech is really, really shaking that up. So from an end consumer point of view, that's fantastic. And then for the FinTech companies in this space, it's encouraging them to be on their toes, always being innovative, always trying to look to see what the next thing is to how they can offer a better service to their customers so that they can grow their businesses and their customer base simultaneously. So it is an incredibly exciting area to be in. But the important thing always from a FinTech company perspective is to understand there's a fin and a tech, so that you're able to balance both what you're offering to a customer so that you can work on the human side as well as offering something from a technological point of view that's going to work. So it's always about finding those balance. I find where really good fintechs tend to do well.
That's great. Thank you so much for sharing your knowledge with us today. So if we did have people who are interested in your services, Ciaran, how can they find you? How can they make contact with you?
So they can get in touch via our website, which is swoopfunding.com, or for Australia, swoopfunding.com.au, for Canada, swoopfunding.ca, or for Ireland, swoopfunding.ie. And we'd be delighted to talk to any small business owner or prospective startup or small business. Be delighted to chat to you.
Fantastic. Well, thank you so much for your time today. Your insights were incredibly valuable.
Thanks very much, Sage. Bye now.
Bye. And if you just joined us, we had an interesting discussion with Mr Ciaran Burke. He's the COO and co-founder at Swoop Funding, and the full recording will be available at Kalkine Media's YouTube channel. Keep watching Kalkine for further live expert talks and live market updates. And as we say, stay apprised and invest wise with Kalkine.